The government is preparing to unlock billions of rands in its infrastructure program. That's as the World Bank's approved a new credit guarantee mechanism which aims to draw private capital into the country's strained electricity, logistics and water systems. The initiative is expected to mobilize roughly 160 billion rand in investment from commercial lenders as well as private and institutional investors. It's also expected to create about 997,000 jobs. Strong. Now that's how Santam's described its 2025 performance. The insurers posted a 10% rise in net income to just over 4 billion rand. Insurance revenue came in 7% higher, while headline earnings per share registered a near 8% increase. A stronger underwriting margin, along with solid growth in conventional insurance, supported the result. Santam's declared a final dividend of 10 rand 90 cents, and that takes the total dividend for the year to 16 rand 80 cents, which is just over 10% higher than the prior period. AVI's food division has helped lift first half earnings, offsetting weaker demand in its personal care and fashion retail businesses. The company has posted headline earnings growth of 12.3% and lifted its dividend by just over 11%. AVI says the results reflected a sound performance in a challenging environment. It's pointed to a stagnant economy and continued constrained consumer spending. Looking ahead, AVI expects constrained consumer demand to drive increased competition, but it says moderating commodity costs and a stronger rand could help ease inflation pressures in the second half of the financial year. Impacts cut its total dividend sharply after a mixed annual performance. CEO Bruce Strong says 2025 was demanding, marked by sustained economic pressure and difficult trading conditions across several markets. Global oversupply of container board and carton board during the period led to lower margins and intensified competition from imports. Impacts posted a 5% rise in revenue, but headline earnings per share came in 5.2% weaker. The company declared a final dividend of 30 cents per share, taking the total payout to 60 cents. That's a 42% cut from the previous period. Mirafes posted a slump in annual profit. Headline earnings plunged 72% during the period, with Mirafe pointing to a stronger rand-dollar exchange rate and lower ferrochrome sales. The company, which operates a ferrochrome joint venture with Glencore, idled its plants in April last year in response to the ongoing market headwinds. It says South Africa's ferrochrome industry continues to face significant structural challenges, including high energy costs and increased competition from Chinese producers, and that the future of its smelting operations remains uncertain. Pan-African Resources is growing its portfolio. The gold producer plans to acquire Australia's Emerson Resources. The deal, worth £160 million, would consolidate ownership of their Tennant Creek joint venture. Pan-Africa's CEO says the transaction will allow the company to optimize project sequencing and capital allocation across the region. As part of the scheme, Pan-African will also seek an ASX listing. Sticking with the mining space, Harmony Gold's flagged higher half-year profit. The bullion producer says its headline earnings per share could register an increase of up to 17%. It cited higher revenue on the back of a higher gold price received and a reversal of an impairment related to property, plant and equipment. Now that's linked to the Tsepong North cash generating unit. Further afield, surging oil prices escalated inflation worries, with the US-Israeli war on Iran showing no signs of slowing down. Let's take a look at this report for more.
From airlines to oil, global shares slumped again as the US-Israeli war on Iran showed no signs of slowing down. European shares fell to their lowest in over 2 months as surging oil prices exacerbated inflation worries. The pan-European benchmark fell for a third session, down 2.3% in early trade. The index fell 5.5% last week, marking its worst week in nearly a year. Oil prices came off earlier highs in European morning deals, but were still up more than 15% at levels not seen since mid-2022. That's as some major producers cut supplies and fears of prolonged shipping disruptions gripped the market. Brent crude futures were up over 16% in early deals, on track for the biggest ever jump in a single day. Disruptions in tanker movements and rising security risks have already slowed shipping activity and left Asian buyers reliant on Middle Eastern crude, especially vulnerable because the crisis is unfolding around the Strait of Hormuz. Roughly 1/5 of the world's oil supply passes through the strait. In Europe, banks, which were at the epicenter of the sell-off last week, extended declines with a 3.2% fall, and in airlines, carriers Lufthansa and Air France-KLM fell 3.9% and 5.2% respectively. On the flip side, higher crude prices pushed energy and defence stocks higher.